Welcome back to another video on my channel. In this video, I'm going to go over how effective supply and demand zones can be and how price always precedes news when we're in a supply or demand zone. So unlike conventional technical analysis, when price is in a supply or demand zone, usually we'll get a nice news drop and price will respectively move up or move down depending on the catalyst. But I want to explain how supply and demand zones can be used like this and how the market is orchestrated in a way that price always will precede the supply and demand zones and how it will always precede certain catalysts that affect the market. So if you enjoy this video, if you learn anything from it, please like it, please subscribe. Also follow me on Instagram. It's linked in the description below. So the market is orchestrated in such a way that these big institutional traders, the big banks, hedge funds, etc., they trade with such large of a size that their liquidity for them to get in their full position at one time is nearly going to be impossible. And if they were to do that, it's going to cause the market to move in such a large move up or down that their full position is just not going to be able to get filled, or price is going to become up or too high or too low from their desired entry price. So they cannot trade with their full position size all at once. So the market is rigged in a way where these big traders, these institutions that know things that retail traders do not know, it's rigged in such a way that when price becomes into a supply or demand zone, when it becomes into a big imbalance like this, usually we will get news articles that follow price. So price will be in a zone and then boom, all of a sudden the market will either tank or rally to the upside depending on a positive or negative catalyst. But really fast, I want to just go over the bigger picture today. So today we had this is the S&P 500. This is the E-mini future. We were opening in a 4-hour supply zone. So obviously in a supply zone, we have supply exceeding demand, and we look to short in areas where we have that type of imbalance. Today was a little different. We rallied into supply, and what's important is that you cannot short strength. You cannot short a rally in supply without confirmation. So we never really got a decent confirmation on a 5-minute. We did, but on a 15-minute, even on a 30-minute, did not get confirmation. And I wait for larger time frame zones to confirm price action. So we never got a valid short entry to the downside. What we did here was we came back down. If you look on a 5-minute, let me maximize this. Came back down on a 5-minute. And it's important to understand how the market works and how the auction process works. You have market participants, you have buyers and sellers. When buyers and sellers are agreeing on a price, the market becomes balanced, and you can say that the market has value at whatever price that the stock or future is trading at. So we're in a supply zone, we're in a massive supply imbalance, but today when we re-enter that zone, we are holding value. So buyers are agreeing with price and sellers are agreeing with price, hence the sideways little action right here for the past 20 minutes where my cursor's at. So when I see this inside of a supply zone, that tells me A, not to short it, and B, buyers are bidding the stock up. Buyers are interested in this value up here. So we can potentially see a nice move to the upside because we're holding value in supply. So when I see this, I wait for a curl up, and once I see a nice curl to the upside or possibly a demand zone to form inside here, and we did get a demand zone, you could take this to the long side, putting your stop loss below the supply zone for a really small risk to a potentially high reward trade. As you guys seen, we had a nice rally to the upside. Even though we're in supply, it's valid to take this long because A, we have a demand zone inside supply, and B, you have buyers agreeing with price and we're holding value in here. That is besides the point. The main point I wanted to make with this video is that how price always will precede news. So besides what I just told you guys about how we held value here, this is a totally different 15-minute supply zone. This is formed in the afternoon, starting at 11 a.m. Eastern. We had a valid 15-minute supply zone. So what happens is price creates a huge supply imbalance. These institutions cannot get all their orders filled at once. So what happens is they make price look attractive to one side, retail's buying, while the institutional sell orders are sitting there getting filled from the liquidity from those retail traders. So we had a 15-minute supply up here that formed. I put in the Discord room that We had a 30-minute and a 15-minute supply zone. Now this is 12:30 p.m. Eastern time. We had a 30-minute and a 15-minute supply zone. This run up, in my opinion, is just a relief bounce from more downside. If we make a lower high here on SPY, SPX, ES, I will long puts with a stop above the 28.37 high. And the key was to make a lower high. So what I was watching was this relief bounce right here. Price sold off, created a huge supply imbalance. I waited for price to re-enter that supply imbalance. This relief bounce right here was telling me price was looking attractive to longs, to retail longs. Everyone's buying right here when you should be selling if you're following the strategy. So what I did right here was I bought SPY puts. Obviously, we're looking at ES, the S&P 500 future. So any other SP 500 related instrument will work. So I traded SPY puts right here. Did not expect this news to drop that the GILD vaccine failed. The Guild vaccine failed. So the news dropped and the market absolutely tanked. I shorted this with not expectations that the market was going to tank like this, but they will always drop news in a supply zone. So negative catalysts will always come in supply zones, and positive catalysts will always come in demand zones. So if you're trading with these big institutions like this, someone must have knew that this news was going to come out. Obviously, on the option scanner, there was huge SPY sweeps, $1 million worth of puts, tons of them coming through. So that gave extra confirmation. So I just shorted this normally like I would, following my system that we're in a supply zone, putting my stop above the high. We made a lower high right here. So this was just a normal supply rejection type of trade. Didn't trust this bounce. And then boom, the news came out. And these contracts on SPY went up like 50 or 60%. I made 56% on my original investment because of this drop. Now, like I said, I didn't know this huge drop was coming. When I saw this, I took my profits really fast. I could have held on to it for another move down. But when news comes out like this and we get a drop in a matter of 2 minutes, I go up 40% or 56%. I'm selling right away because I didn't even know the news. I had to wait a couple minutes until I got that CNBC alert on my phone saying that the drug failed the trials. So it's just important to understand, if you trade this system, if you trade this strategy, how price will always precede news. They'll always drop a negative catalyst in supply and always will drop a positive catalyst in demand, creating a huge imbalance, a huge area of illiquidity. And really fast, just reviewing two other trades we took. We had Roku, which rallied today in the morning, right up into a daily supply zone at $127.84. So a daily zone is obviously a larger time frame zone, so it becomes more valid. So we came up, rallied, everyone's buying. Look where we topped out at. We topped out at right at daily supply. We had a nice 5-minute confirmation. We had a nice 15-minute confirmation. 30-minute we had confirmation. So all the time frames were lining up for a nice downside move. So if you missed this first entry right here, this was from 128 about all the way down to 125.5. So 2.5 points the first time down. But what's important here is that we came up, retested it the second time. So if you missed it the first time, could have took it short the second time. And this lines up with the same time this came into daily supply was about the same time that the S&P 500 came into that 15-minute supply zone. And as that news article came out, pretty much every market leading stock dropped following the S&P 500. So you could have taken this the second time right here on Roku. The other trade was Apple we took. So this is going to look very similar to the S&P 500 in the morning. We rallied up. You had market participants, you had bidders stepping in here. They had agreeing on a price here. We held value here in supply. Old supply becomes new demand. Held. You could have put your stop loss below this 27.70.60 low, $277.60 low. Could have bought it once we formed new demand coming to the upside. Could have bought it when we broke 279 because there was a huge wall on the offer at 279. So when we did break 279, what's important here too is if you look at the level 2, as soon as we broke over 279, there was a huge buyer at 279.40. When you see that breaking up above a huge wall of sellers, that's telling you buyers are interested above that wall of sellers. That's going to give you extra confirmation that we're going to have a nice other rally to the upside. So this was a good trade, obviously. So it's important to not just short in supply. You have to wait for a reaction. You have to wait if sellers are in control, buyers are in control, or are we holding value? Hope you guys enjoyed this. Like I said, please subscribe if you learned something. Like this video, comment if you have questions, and follow me on Instagram at Investitrade. It's linked in the bio. You